The topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio, its employees, or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to Entrepreneurs Ascending, where we believe in a better life through better business. Here, we help you aspire to greatness, achieve your goals, and ascend to new heights. Whether you're starting, scaling, or exiting, we're here to empower you with inspiring stories, enlightening discussions, and transformative resources to help you accelerate your success. Now, it's time for Entrepreneurs Ascending. And yes, now is time for Entrepreneurs Ascending, and we're excited to dive into numbers. But before you run off, because I said the numbers word, it should be fun. It should be fun. We've got a fantastic guest that's going to actually simplify profits. And at the end of the day, even though not everybody has a strength in numbers, it's important to understand them, at least at a high level, to be able to ask the right kinds of questions and be able to understand working with strategic partners such as, an accountant or a CFO or a fractional CFO or your bookkeepers. And if you don't have that knowledge, I've talked to some business owners that have been embezzled from 3 or 4 times, actually. Not even kidding. So, and plus, how can you make good decisions if you don't know your numbers? So without further ado, we're going to bring in Sendin here today. Sendin, come on in.
Hey, good morning.
Hey, afternoon, whatever time it is. I mean, it's morning somewhere, right?
Yeah, it's true.
So, good morning to all of you on, the other side of the planet.
Asia. Yeah.
Asia-ish. Yeah. So Sendin of Sendin Bookkeeping, he's here with us today, and you're going to dive into simplified profits a little bit today, right?
That's right. Yeah. Try and make it easy, try and make it simple, but really geared towards the end in mind. The goal at the end of the day is to build a business that can give us the lifestyle that we want and, set us up for retirement at some point, work 50% less, but earn 50% more. So that's the goal.
Yeah. So many people build a business because of wanting to have that wealth or at least that financial independence, plus some sort of legacy, either to pass on to their kids or maybe for the community, charities and whatnot. But if you don't have the profits to do that, then you're going to be struggling with those goals, right?
Yeah. It's interesting. It's like, you're burning an oil lamp and you just want to make sure that there's oil there for the lamp to continue to burn so you can continue to shine your light. That's kind of what we're after.
Yeah.
And, there's many ways to go about it to make sure that the business is successful. But, as we'll get into it, it starts with clarity, and I can, define what that means. So.
Well, awesome. Well, before we get too deeply into that, I think it's great for people to know you a little bit more and kind of your journey. So why bookkeeping, Sendin? Like what made you decide to go that route?
Man, bookkeeping is awesome. No, I genuinely do enjoy it, but it all started with reading the book Rich Dad, Poor Dad. That happened in 2018 for me, and really set me on a path to wanting to understand finances. There was a page in the book that talked about, there's 4 critical skills to success in business and investing. And one of those skills, what the author mentioned, was accounting, but specifically having that ability to interpret and analyze financial statements. So I just kind of shut the book at that moment and was like, all right, it's time to take action. I wanted to become a business owner, and I just read that accounting was a critical skill to be successful in business. So without further ado, I was like, time to learn accounting. And I really went off on a trajectory of teaching myself, but then also finding the right educators to teach me properly through the proper avenues of learning the theory in accounting and then how to apply it to serve small businesses here in the Midwest, but also across the nation. And so I love doing business. I think business is a skill in and of itself. When whatever we're doing, whatever service we're providing or whatever product we're selling, there's a certain way, like Matt, you mentioned like the legacy. There's a certain way that you do business. You can compare two business owners and you could be like, you could go to their employees and be like, hey, what's it like to work? What's it really like?
Right.
And, when you do it poorly, people feel disorganized. People have anxiety because things are in disarray, right? There's not a lot of guidance or instruction. There aren't processes in place. And so there's a poor way of doing business, but there's a great way of doing business. And so what I've found personally is, I love the bookkeeping for the clarity that I can provide on the profit side, but also me being a business owner, I've enjoyed learning the skill of how to create a great environment for people who choose to work with me. So that's the reason for bookkeeping is I knew it was a critical skill for a business.
Okay. So diving right into it, you read the book and then you closed it right there. Didn't even finish the book. And you went straight.
Yeah. That was a little exaggeration. I definitely did finish the book.
I took you directly at, that was what happened. You're like, oh, maybe I'll get to this once I'm wealthy, but, so that's interesting though, because, you had a passion to build business, but you realized that at its foundation, understanding accounting and understanding profit and what goes into that was, you understand that was what you needed to know to be able to be successful. Where, a lot of people like end up kind of just getting into business because of whatever life circumstances, or they have, that entrepreneurial seizure, as Michael Gerber talks about in the E-Myth, and they decide that they can do something better. And so that they want to go that route. But you said you wanted to be successful in business. And so very foundationally, you're like, numbers. I got to know the numbers.
Yep. Okay. Yeah. That's nail on the head right there. And what I found is interesting is when I was a W-2 employee at some point, I had a previous career. What's interesting about that lifestyle is we are trained on the expense side of things. When we develop our personal budget, our sort of income is determined. It doesn't change all that much. We have our salary, we're paid bi-weekly, maybe weekly. And we're really focused. Okay, let's make sure we don't spend enough. But I think, I have so much empathy for the entrepreneurs in the world, because you enter this new world that requires new skills, because all of a sudden you determine what income you want. And so what I found personally is one of the biggest pain points that entrepreneurs face is when it comes to trying to generate enough profit is their pricing structure. It's step one of the equation, but in most cases it is too low when an entrepreneur starts out. And navigating that has been quite an interesting journey in trying to advise clients on, this is actually what the price should be, because these are the profits that we don't have, or their profits are too small, or we're operating at a loss. Starting with pricing is what I like to call step one.
Yeah, well, everybody loves to raise their prices, right? Everybody wants to make more money, so it should be pretty easy just to go in, talk to the business owner and say, hey, raise your prices. And like, oh, that's a great idea.
Right. Yeah, it's definitely one of the more gut-wrenching things that a business owner has to do. I've done it in my journey. It is, you could think about it rationally. You'll be like, oh, it's so obvious. I need to raise, to this amount. And the way I did it, the way I recommend for others is to find other entrepreneurs in your industry that are operating at a level that sort of you admire in some way, right? They're 5 years ahead of you. They have 10 times more employees, and to ask them about almost on a mentorship mentee level, what's your pricing structure like? How are you pricing your services or your products? And to go from there, start with a template. You don't have to, break it down into this science equation. And I always recommend, especially for home service businesses, look at someone who's operating a franchise. That franchise, more times than not, has figured out their pricing, and their pricing is guarantees them a profit because they've gotten down. They've already done the science. They've done the work behind it. So yeah, it is not an easy task to go to a customer and deliver that message. And this is where, it's interesting. This is where how you present your value, because what is it? The 4 P's of marketing. It's like pricing is one of them. Pricing ends up being an aspect of your marketing, and it becomes intertwined with your marketing, because when you present a higher price than your competitors, or than most of your competitors, people are usually going to do the research. They're going to go to your website. Does your website look scrappy? If it does, they're not going to be able to justify your price. They don't see the value. So how do you communicate your value? How does your proposal look to them? Does it look professional, clean, well prepared? Do you show up on time to the meeting? Do you communicate it in an effective way over the phone and not through text? Things like that. And this goes into, pricing psychology, which is way out of my wheelhouse, but I just kind of bring this up to say, there's a way to demand the price that you deserve. And a lot of that comes into play when, have you built a relationship with your customer? When was the last time you wrote a thank you note to them just to show your gratitude for their business? Because they could do business with anybody else. It's little things like that. The more you build up your social capital, your social currency with your clients, with your customers, the easier it becomes to raise your price.
Yeah, they value that relationship and what you bring to the table, especially if they're that A grade client, like somebody who kind of gets you and that you get just kind of resonate with, right? Yeah.
Oh man, yeah.
So so there's definitely that path to raising prices. There's a couple layers of profit, right? There's like gross profit, and then there's net profit. And there's like net income, right? And then there's the EBITDA. Yeah. Can't say it. EBITDA, and all that. So can you break down and simplify that a little bit so people kind of really understand some of those important numbers that they need to be looking at?
For sure. These numbers all come on the income statement, or what's commonly known as the profit and loss statement. So
hopefully more profit than loss, but that's what we're trying to get at here, right?
Exactly. Yeah, for sure. And in a funny story, my mentor actually hated calling it a profit and loss statement, because he was like, you can't have a profit and a loss. It's profit or a loss. And so it was just this accounting nerd was like, oh, you can't do it.
Depends on the moment.
Exactly. Yeah, for sure. So on the income statement, you start out with the revenue that you brought in for the month, and gross profit is that first profit number that we see. And it comes into play when you have, every business has it, these direct costs as part of doing your service. So for me, in order for me to have a gross profit, I provide a bookkeeping service. I get paid upfront to do that bookkeeping service. I get revenue. In order to provide my service, I have to employ an individual to perform it. I have to pay their wage. And so their wage is a cost of me doing business. Me paying for QuickBooks Online in order for my client to have a software, that's a cost of doing business. So that's where you get into gross profit. My business has a niche specialty in working with home service businesses, specifically the landscape, lawn, and tree companies. And examples of direct costs that they experience is field labor, people actually out performing, doing the jobs.
Mm-hmm.
And then you have workers' comp insurance. And
Yeah.
these are two of the examples that you can think of that, hey, in order to even run the business and provide the service to the customer, these are the costs. And you get that gross profit number. In general, this is not industry specific. This is in general. When you look at your income statement, you should be looking for a 50% gross margin and gross profit margin. So that's saying, hey, even if I'm a $100,000 revenue business, I should be generating $50,000. Half of that should be gross profit.
And so, and that's before administrative costs and maybe if you have like a secretary or something like that. We're talking about costs that are directly involved in the production of the good or in providing that service, right?
Yep.
Okay. Building,
So,
that's not in gross profit, right? Unless
no, any
right.
overhead,
Okay.
any overhead softwares, your operating system, your CRM, things like that. If you got an office person that you're employing to do admin work, they don't go into that cost of goods sold or that direct costs area.
Right. Okay.
And so I think my biggest recommendation in that section, because I do believe that is probably one of the biggest opportunities for a business, is how do you know if you're at your 50% margin for gross profit or you're not? You have to get a clean set of reports. Like that's bare minimum number one. So if you don't have a clean set of reports, accurate numbers that you can depend on, then it's difficult to make a decision on that.
Yeah.
Beyond gross profit, that's when we get to, I'll just cover, net profit. And that's after we cover overhead and all those administrative expenses, your advertising and marketing expense, and then any overhead payroll expenses. So that might be your general liability insurance. If you own properties, that'll be your property tax, utilities, your rent, and things like that. So all your softwares, you take all that away and you end up with what's left over, essentially. I think that's a great name for net profit, is what's left over. So that number should be around 10 to 15%, pushing for 20%.
Now, is that before or after the owner pays him or herself?
Yeah, great point. This is after the owner has put themselves on a salary or has considered their salary being taken out. Yeah, that's a very important point. Me operating my business as a solo operator and I'm not on payroll, my profit is always going to look high. It's always going to look high. But to accurately know, is my pricing high enough? Am I paying my labor too much? Is my overhead too high? Am I hitting that 10% net profit number? You can't know that until you account for what would it cost to pay your own wage as an owner. And you determine that by saying, what do I do for the majority of my time in the business? And this is a very generalized approach, but I think simple is better. What do I do for the most of my time in my business? What would I pay somebody to do that job? And that's the salary. So if you take that away, and then you're not at that 10% profit, you have some areas that you can improve on in your business. You could be making more money. It's very possible. Yeah.
Okay. Yeah. So, and that's what I see oftentimes, that, just trying to figure out what all am I supposed to be taking out of which number, and then forgetting to count yourself, as part of that as well.
Right. Easy to forget.
Yeah.
And we're not taught. I mean, I don't. It's like, unless you went through a business educational program before you started your business, you're not taught these things, and it's unfortunate. But I think it's the reality that we all face as entrepreneurs, that we enter the world of business really bootstrapping it most of the time.
Yeah.
And in my opinion, that's okay. It's okay for a short period of time, because you'll learn, you'll make mistakes, you'll learn. And I think that's inevitable across our entire journey, not just the startup phase, not just when we're a medium-sized business, but even, on that path to becoming a platform company. It's really, we're always going to be making mistakes. We're always going to not have the full knowledge. But man, listening to podcasts like this, I think investing in yourself is the best investment, because man, the ROI comes back to you tenfold, Yeah.
I mean, I'm doing a whole certification program now, and it's not cheap, and
No, that's awesome.
and it takes time. It's I talk to a lot of business owners, and they can't eke out an hour a week. And I understand time is the most valuable asset we have, right?
Yeah.
But you have to use that wisely and invest in that time that we have. That's going to give you more time later through principles of leverage, and being able to build that team, and so that it's not you and all your time, but yes, investment in yourself is huge.
Yeah.
So
If you're feeling like you don't have enough time to spend with your spouse, you don't have enough time to spend with your kids, you're working long hours on weekends, you're stressed, you feel like things are all over the place, you feel like you're all over the place, I think that's a clear indicator that it's time to take a risk and spend some money on a business coach, a business consultant, a business program that can show you the answers. Because business is not something that you need to invent. It's, people have done it time and time again. It's just a matter of getting the answer told to you and having somebody help you implement it. And then especially, I think on the numbers side, if you have a business that, man, God forbid that you're drowning in debt because it feels like, man, you're playing credit card roulette, and having that stress, business should not be that way. Business should be a cash flowing machine, and hiring the right people to help you along the way is one of the keys to success.
Absolutely. So when we're planning our pricing, because ultimately we can't have the profit if we don't have the proper price, right?
Yeah.
And even if we kind of do some research and call around and whatnot, and maybe do some private or some secret shopping.
Yeah.
How do we walk backwards, if you will, and say, okay, so I know that I need to have this much, to flow, to come in, to take care of business expenses, also, and my salary and my team members. And how do I walk backwards, knowing where the number's going out, or the money's going out, so that I can kind of plan my pricing for that?
Yep. No, great question. I think step number one is to not make it complicated. Take a sheet of paper and a pen and write down on a monthly basis, what are the expenses that you have to pay in order for your business to operate.
Okay.
This includes monthly, ongoing, recurring subscriptions and charges, and the people you have to pay. Write their salaries down, write what it would cost for 1 month. Take a look at the entire year and write down what are the annual, expenses that you have. Maybe you pay your insurance premiums for your business on an annual basis, not on a monthly basis. Take all those annual costs into account, especially with softwares. Maybe you pay an annual fee. Divide those by 12. All right, I have the total amount of expenses that I have to pay. Once you have that number, you're going to say, okay, I definitely have to earn this amount for the month. Then you're going to say, all right, I should be shooting for a 15% profit. And then it's tough to give an advice to a general, audience where I'm talking to everybody and anybody, but to make it, I think, simple and actionable, I would say for a home service business, it would say, for every job, I need to make sure I earn 50%. on this job. That's that gross margin number. Then taking that sheet of paper and writing down, all right, to do this one job, what's the drive time? How long does it take to drive from my house to, or my company location to the customer's house? Obviously, every customer's house location is going to be different, but you would account for an average time. You would go down the list of all the costs that it takes to operate and have, a field crew member go to that customer's property and service that property. Whatever your costs are for having that vehicle, having that truck, having that employee, having that time of drive time where they're not actually doing the job, they're just getting to the site, multiplying that by 2, that's your price. And then you have your overhead that you have to cover for the month. And what I would like to say is you do a trial and error approach, and you say, let's make a decision and increase our prices by 25%.
Yeah.
Let's start selling jobs at 25% higher. And then you look at your profit number for the next month. I think there is a way to reverse engineer it, Matt.
But it might be a little bit hard to cover in the next few minutes.
It's almost like a science equation at that point. But I would take the trial and error approach because it's simple and straightforward. Increase by a certain percent, and I would say whatever percent you think you should increase on, add another 10% onto that, because you're usually going to be way more conservative than you should. So from there, have your bookkeeper accountant prepare an income statement for you. Take a look at how the numbers look, and more times than not, if customers start telling you, no, I can't work with you anymore, then you're not communicating your value enough.
Yeah, generally speaking, when I'm working with my coaching clients, if we see a close rate higher than like a 80, 85%, depending on the industry, but definitely like over 85%, your prices are way too low because too many people are saying yes. I mean, maybe you've got a great target market that you're working with, and maybe your marketing is totally on point. Okay, maybe, but there's some wiggle room for increasing those prices typically, and there's always that fear that I'm going to lose 50% of my business if I increase my prices by 10% or even 25%. But most of the time that doesn't happen. And most of the time you have that social capital already. People know you, like you, trust you, and they're going to go back to you. And they value that more than maybe saving a few bucks with somebody that may or may not produce the same quality results. Right? Do you see that as well?
I do. Yeah. No, I mean, I not just to make a long answer long for no reason. It's just, it definitely is a harder part of business, but if you're slammed and you don't have a lot of time, great solution is just to increase your price.
Yeah. No, that's true. That's true. If you're running around too frequently doing all these cheap jobs, look, hey, I know you want to keep that relationship with that customer and that client. I know that there's a lot of pressure there, but the people who really value will pay you more. And so weed out, the bad customers and just have more fun doing what you love with the people you love doing it for, right?
Yep. Yeah, exactly. You'll be happier doing the job when you're paid, twice as much or whatever that, a change needs to happen. Yeah.
You're like, hey, there's more money in the bank, but I've got less stress and just less wasted time, less wear and tear on my car, probably from driving all over the place.
Right.
So, well, thank you so much, Sendin. I really appreciate it. I'll have to have you on another time to talk about maybe some other bookkeeping and accounting basics and helping people understand their numbers. But in the meantime, if somebody wants to get a hold of you and talk more in depth about these things, how would they best reach out to you?
Yeah, I think the best way is to go to my website is www.sendinbookkeeping.com. And there's a list of my services there. And there's a contact form. As soon as you fill out that contact form, I'll be in touch, within the next day. And you could also shoot me an email at sendin@sendinbookkeeping.com. And I think those are the two best spots to reach me at.
Great. So you go sendinbookkeeping.com, and then you send in the form, or you send in an email to send in.
Yeah, that's right. That's right. Yep.
Easy enough to remember.
Yep.
All right. Well, thanks again, Sendin. I appreciate you being here today, man. And I look forward to hopefully we can, like I said, do this again. And thank you out there and audience land, the ascending entrepreneurs out there. And we look forward to more episodes educating you. If you're listening live, remember there are some ways to get involved, and you can comment and we'll actually answer. Pretty much every week we're live except for the third Monday. That is a pre-recorded show, honestly. But other than that, we will try to get back to you. And if you have any more questions, feel free to reach out to me, Matt Barbie, at matt@timeforsuccess.io. And we do have a couple workshops coming up, one in St. Louis. That is the 4 decisions for scaling your business. That is going to be this Friday, 8 o'clock a.m. And if you'd like more information about that, please reach out. Thank you very much. Thank you for being with us today. But now is the time to put what we talked about into practice. Remember, your family, employees, and community are depending on you to rise up and win. The great news is you're not alone. You're part of a resurgence of entrepreneurs who are ready to take their business, life, and impact to the next level, and we're going to do it together. This show is powered by Time for Success, where we help business owners every day who want more freedom and wealth while building a legacy of positive impact. Please follow Time for Success on LinkedIn, Facebook, and YouTube for more helpful strategies and tools for creating the business and life of your dreams.